So what about the economy in all of this? We've heard about how damaging this could be for the country's bottom pocket or bottom line with the week ahead. What economically are we looking ahead to? KPMG Lead Economist, it's Frank Blackmore back with us this morning. Frank, hello to you. We'll be talking about the economic week ahead in a moment. National shutdown today. Does this have an effect on the economy? Should we be worried?
This can have an effect on the economy, and one would only know that what the impact would have been ex post. So after the event, once the rands and cents have been tallied. But if we do just a simple estimation and take last year's GDP divided by the number of working days available, every work day is worth around 26 billion rands. We know today a lot of people will go to work. There will be productive activity taking place, but to what extent? So the cost can be between 0 and the 26 billion. Even if we take a halfway point, that's a lot of that's a large cost to the economy. And of course, one of the additional fears was what's the reputational damage? We've seen quite a deterioration or sell-off in South African equities and bonds over the last week or two. That's had an impact on the value of the JSE, and of course then the reputational damage going forward. Can you invest in a country where potentially national shutdowns are orchestrated by political parties that end up in violence if it actually goes that way? Because, as you say, most of us would be hoping that nothing happens in that regard.
I suppose it's a difficult day to try and measure economically as well, Frank, because today many people would consider it to be a long holiday, a long weekend, tomorrow being Human Rights Day. So some schools may have been closed anyway. Some of them are definitely closed because of the shutdown. So I imagine for someone like you, when you have to try and do a report back on this, it's going to be difficult to measure because it could be a long weekend for a lot of people. Friends of mine have actually taken Monday off because tomorrow's a public holiday.
Yes, no, I think that's right. So a lot of people would have taken today off in combination with tomorrow. And that does make it difficult. So we'll only see by the end of today if there were any incidents and then what those incidents have cost the country.
Can we talk as well about what's going to be happening as far as the rest of the week is concerned as well? Because we need to talk about inflation data for later this week. Just remind me exactly when that is. I think it's coming up Wednesday, if I've got my diary correct.
Wednesday.
Talk to me about that. Why is that so important in South Africa's world?
Well, I think not only in South Africa's world, globally, everybody's watching inflation. We know what happened in COVID, and then that was sort of augmented by the incidents in Ukraine, led to high inflation globally, and that inflation we're trying to drive down in order to get our interest rates back to some kind of normal level. And the expectation is for further decrease in inflation. Our January inflation number was 6.9%, down quite a bit from the 7.8 we saw last year in July. And we expect a further decrease in inflation in February, but probably not very big. So perhaps 6.7 at best, 6.8. Perhaps is expectation at this point. We want to see inflation decreasing so that the expectation would be then interest rates don't have to rise as much and can perhaps be decreased by year end. And that will obviously have a stimulating effect on the economy, which is probably already close to or in recession, given the growth that we sort of experienced in the last quarter of 2022.
I always love asking lead economists this and chief economists because you hate to give me an exact number. Dare you look into your crystal ball, Frank, and give me a number for Wednesday? What would you like to see and what are you expecting in reality?
Yeah, the lower the better. So if it comes in around 6.7, that's what I'd like to see, but I'm afraid we might only get 6.8, which is still obviously way above the 3 to 6% inflationary target used by the bank, and that would mean a week later we'd perhaps get another 25 basis points increase in interest rate, which I guess is the real bad news then.
Yeah, absolutely is the real bad news, because I hear everyone who owns a car and owes money to the bank and has a house bond, every time we hear the word basis points going up, it just means a little less money left over in the bank account at the end of each month. Frank, what a pleasure. Always good to have you with us, explaining the impact of today. And as Frank says, it's going to be very difficult to measure. Yes, it's a national shutdown, but also it's a long weekend for many people. But Frank Blackmore, thank you very much, KPMG Lead Economist, for making time for us this morning.